Hello, fellow Ghost Traders. Welcome to the weekly market update. Today is Sunday, March 19th, 2023, and this update will be audio only as I am dealing with a sinus infection that makes it look like I just lost a 12-round fight. So the market was focused on the banking and finance sector last week. A lot of concerns over the viability of some of the less healthy banks after the collapse of Silicon Valley Bank just the week before. With all the bad news, in what is probably the most crucial sector of our financial system, you'd expect that the major indices would be down in a really big way for the week, but that would be an incorrect assumption. A lot of money went out of bank stocks last week, but most of it flowed into other sectors. With all the extensive technology stocks in NASDAQ, you can see where a lot of that money went. NASDAQ gained about 4% for the week. Investors expect these stocks to weather any economic storm better than most of the rest of the market, moving to what is considered a safer place in the banking sector. As to banking stocks, the big concern last week was with First Republic Bank. First Republic is similar to Silicon Valley Bank, a commercial bank headquartered in the San Francisco Bay Area. The stock dropped 35% by Thursday on concerns that they might be the next bankruptcy in the financial sector. Then during trading hours on Thursday, it was announced that 11 large banks, JP Morgan Chase, Bank of America, were making uninsured deposits totaling $30 billion into First Republic, helping shore up the balance sheet. This gave the stock a bounce to end Thursday's trading, but it was short-lived. First Republic announced Friday morning that it was suspending its dividend. In addition to that, the Fed reported that various banks borrowed almost $12 billion from the Fed during the week, which is also taken negatively. The entire banking sector was under pressure all week, but First Republic illustrates the factors involved in last week's movements. With all the turmoil in banking, the market adjusts its outlook on the upcoming FOMC meeting. Until last week, it was expected the FOMC would raise interest rates by 0.5%. But with the new issues, the expectation is now cut back to about 0.25% hike, with inflation still a significant problem. The FOMC and Fed will still feel the need for a rate hike to save face, but larger rate hikes will likely put even more strain on weaker financial institutions. The other concern is that healthy banks will reduce lending and conserve their cash. With less spending, there will be less spending on the consumer level, bringing fears of recession back into play. The conclusion is that this week will likely continue to focus on the banking sector. Traders should expect another volatile week. The other interesting thing is whether the money will continue to flow mostly to NASDAQ stocks or if other sectors may start seeing more money inflows. There should be no shortage of items for traders to monitor and react to in the short term. And good luck with your trades. Now on the Dow. The Dow closed at 31,861, down 47 points for the week. Dow congested last week, trading on either side of the 32,000 level. We may have some support in this area, but it's far from certain. For now, our short-term bias is still leaning toward the bearish side, but a lot depends on the banking news this week and the effect on the market that it may have. Onto the NASDAQ. The NASDAQ closed 11,630, 492 points up for the week. The NASDAQ really benefited the drop in banking stocks last week, especially Meta. It continues to move upward after bouncing on 11,000 support at the beginning of the week. There is some resistance around 11,750, so we're going to keep watching to see if we can get through that level. Short-term leans slightly to the bullish side, but could become more bullish if we could push through that 11,750 resistance level. On the SPX ended the week at 39.16, up 81 points from its Monday open. The week was fairly choppy. Thursday broke it above the 200 DMA and then gave most of it back at the close below the moving average on Friday. For now, the beginning of the week will likely see some indecision awaiting the FOMC Wednesday announcement. With all the negative factors, we will still remain slightly bearish going into the FOMC announcement. If we can see a close above the 200 DMA and hold its support, we may see some bullish movements. But for now, keep a close eye on the short term and be prepared to adjust or repair any trades as necessary. That's the weekly update. We'll monitor and update as necessary. Everyone have a wonderful week out there trading. Go out there and make today your masterpiece. Have a great day.